What's up, everybody? Sal, the investor here again, back at it again for another crazy day of investing. World is going crazy. Everything is topsy-turvy, but, as always, this is not financial advice. This is just kind of some information, and you can watch me either succeed or you can watch me crash and burn at this. So, just going over a little bit today. Kind of green, everyone's talking about Bitcoin has hit the 30,000 resistance level, but I think Bitcoin is about 31,000 at the time of recording this video. You got the new Luna down, of course. You got, of course, the old Luna down. I've been watching it and steadily investing in ADA, and that's up pretty good. I like where that's going. Of course, we got XRP slowly climbing into the low 40s. Hopefully, it just stays there for the next 6 months as I just keep socking away into there. My other one, Crow, in 2 weeks, that's my next big investment in there. Going to plop a good chunk of money into there. And, of course, DOT, I've been every 2 weeks, been putting a little bit of money in there. So right now it's a recession. And it may not seem like it to a lot of people are talking about we're heading for a recession, but I'm here to tell you we are already in one. We are certainly already in one. Layoffs have started to happen on big companies, mortgage firms, things like that. Companies are already starting to trim the fat. There's a downturn in truck and drivers. I expect about 50% of independent truckers to go bankrupt, quit, and leave the industry. There's a diesel fuel shortage. There's going to be a supply chain shortage. There's going to be quite a bit of craziness going on over the next 6 months. And I think right around October is when we're going to hit that, when people are going to realize that we are in a recession. And that's going to be the make or break for probably the Democratic Party. Some people hate to see it, but whoever's in control when the economy goes down, they are no longer in office. So that's just something to keep in mind as we go through this. But this summer, it's not going to feel like it, and I don't think people are going to react to it yet. You have to remember, people are not proactive, they are reactive. So most people will react to the recession when it's too late. And so now I'm saying a good thing to do is just get a game plan to go right now. If you have no debt or very little debt, start socking away money, start investing, start saving. And the way you're going to have true success, the way you're going to have success is if you stay focused on just slowly building and growing. Like you need to start, now's the time to start building your savings, your investments, your nest eggs. This is the era where it's going to go. And where I think we're going to end up is this is going to be an 18-month recession. 18 months is what I'm anticipating. Maybe 20, maybe 25, 30 months at the most. But even still, I don't think this is going to be as bad as the one that's coming around, that should be coming around the 30s. In another 7 to 10 years. But I do think housing market's going to bust. Your retail's going to bust. Grocery stores are going to bust. And then trucking's going to shrivel. Now, this is good if you own a trucking company, because I own a moving company and I could pick up dry van lines. So, like dry goods, like boxed goods, canned goods. There's a plethora of things that need to be shipped that I can get my trucks out, get a 26-foot truck, get those shipped out. And right now, they're not paying as much, but give it 6 months, they're going to hit the rates that you want. Because they're going to have to get that stuff to where it needs to be sold so they can make money. But with that said, let's just take a quick look at the markets here. Can't ever see where I put that sucker. Let's just take a look at the markets here. Because we're looking, it's kind of ups and downs. These are just some of the things I'm watching. Like Coinbase, I want to get into, but that's I'd probably wait on that one. That one's looking like I'm going to expect it to drop a little bit more, maybe another 10-15% over the next 6 months. Then it'd be a good time to start getting into that. NLY is a really good one. Definitely you should watch that. I don't know. I'm kind of keeping some in here. You got UPS. Now, when the recession hits, Walmart is going to be the one that you should be getting into. It's going to start dropping now because their consumer goods are going to start going down. So, cell phones, toys, biking, sporting goods, pet supplies, all that stuff, that's going to go down. Now, what's going to happen is at the end of this year, Walmart stock's going to double. Is going to start its pace to double in size. So I expect Walmart to be right around $250 in 2025, and that's because they are the biggest retailer in the United States and therefore have the biggest reach for necessities like toilet paper, paper towels, toothbrush, toothpaste, soap, detergents, both dish detergent and laundry. You also have food, and you also have necessary tools for like cooking supplies, plates, simple things like that. You don't think they add up, but when a recession hits, those things get bought the most. And Walmart's my top pick, followed by Target. I know everyone's saying like, well, the consumer confidence is down. Yeah, consumer confidence is down for buying a goddamn TV, but people will start buying in droves from Walmart and from Costco and from Sam's Club, all the necessities for life. But I would not be also surprised. You should get money into Best Buy because their appliance division will take off as well, because as people buy more food in bulk, they are going to have to find ways to store it, which is i.e. freezers. So they're gonna rise. I'm kind of watching Robinhood because I do like Robinhood as an app. I'm going to have that. I'm going to go over that later. But now let me just show you quickly my portfolio here. Now this is one, like I said, we started in January, and I'm working off of a $52,000 a year salary. And that's what I actually pay myself through my moving company and cleaning companies. I pay myself dividends, but I pay myself a salary, and you should pay yourself a salary just in case everything blows up in your face. And I'm still paying into my Social Security and all that other fun stuff. And I still have myself a steady income on my record. So I recently purchased today, and only purchased like $100 worth of shares, but they pay $24 a share in dividends. So you see where I'm going with this. NLY pays about $13. They do more corporate development. ORC does more residential development, loans, things like that, mortgages, everything else like that. NYL has been more solid. ORC has come about after the financial crisis, so we'll see how they play out. Apple's one I sold Apple, but now it's time to get back into it down the road, because for some reason, whether the economy goes up, down, left, or right, people still buy iPhones. I mean, I have an iPhone right now, and I'm not really that techie of a guy. But I also have my Bank of America, which is, I just did a video on that. I'll post that into the description for you. But you should watch that video detailed why I think Bank of America is going to be a good choice over the next 5 to 7 years for you. I know that they specifically announced that they did not get into crypto, that they're not going to get in crypto, but I have inside sources telling me that they are strongly developing that right now, as well as their market risk in cars is not quite as bulky as others. And that brings me to my final point about this recession is that we have prime rate repossessions up 33% from last month. I expect that by the end of the summer to be up 70, overall 114%. Because there's a lot of people during the pandemic that bought these cars, and now the value of cars are going down. They're not rapidly, but they're starting to go down. People have less of demand for it. People are getting back to work. They're not sitting at home thinking I need to replace my stuff. So they're ready to get. They're either ready to not get rid of it, or the payment has become too high. They're getting laid off, and they're starting to abandon their vehicles. Now, the subprime lending market, the repossessions are, I think, now like 60% of loans given, which is terribly bad. However, that market always kind of goes up and down like that, but where you don't want to see it is prime clients, people with great credit scores and great history of payments, all of a sudden walking away from their loans. That's going to be very bad. But for the car industry, it's going to crush it. Another one, I think, Netflix. I know Netflix, if we're looking at the year, we're down like 66%. It's still up over a 5-year trend, but we're down 66%. It's probably going to drop another $100 over the next 6 to 12 months. However, I don't know why people get upset. Of course, a business is a business, so they're going to charge more for subscriptions and get ad services. What a surprise. That's kind of something they have to do. But with that said, guys, like and subscribe to the video. It really, really helps me out and helps me get this word out to everybody else. And like I said, my goal is to get my total crypto and investment portfolios of this up to $10,000 by the end of June. Right now, I'm sitting at, last night I was at 5,400. And right now, with some of the gains I've made, I'm at about 5,800. So I only have 4,200 to go to get to that goal. So let's see if I can make it in 30 days. I had 31 days last month. I have 30 days today. Like and subscribe if you want to see that process, or like and subscribe if you want to see me crash and burn and go broke. Either way, follow me, like and subscribe. I'm going to start posting my Twitter page, the Instagram page, as well as setting up a Facebook page. So thank you guys. Like the video, subscribe, and I'll see you guys later tonight.